Welcome. I want to share with you 5 indicators that I consider to be helpful in TradingView. Now, before I share with you these indicators, understand this. An indicator should help you to identify something that you already know. For example, if you want an indicator to show you bullish or bearish engulfing candles, you should already know what bullish or bearish engulfing candles are. If you want an indicator to show you divergences in the market, you should know what divergences in the market are. So it is compulsory in trading that you start by learning the traditional way of trading before you can move into indicators. If you start with indicators, you will not know much in the Forex market. So please make sure you go for trading the traditional way before you can use these things. These are only used to boost your strategies or help you with certain things in your trading strategy. All right, so the first indicator or indicator number 1 that I'm going to share with you is the one that you see running on the screen. Now this indicator, before I can show you the settings, can help you identify your buy or sell points in the market. Let me put it like that in simpler ways. But know that you can't use this thing alone. You have to add it with other things. For example, you can bring in the 200 exponential moving average, and then you make the length to be 200, and then you press OK. This is what some traders do. If price is above the 200 period, you look for buy entries. If it is below, you look for sell entries. Okay, let's remove this indicator so that we set it afresh. What you will do is come to the search box and type UT bot alerts. It is the UT bot alerts right here. As you can see, UT bot alerts, you select that. It is found on the indicators. What I like about this indicator is that you can decrease or increase the sensitivity. You can increase or decrease the sensitivity. As you can see, let me move this. If I decrease the sensitivity, you get more signals. If you increase the sensitivity, you get less signals, but the less signals are even more accurate. The second indicator that I'd like to show you is the Echo Focus by Lux Algo. You find it on the search box and then you select it. This indicator predicts the future, and I have used technical analysis to test how accurate it can be, and I found that the focus that it gives it makes sense. Let me put it like that. It makes sense. So you can also use this to confirm your analysis. For example, if I can show you using my concept of key levels, this was the lowest point and that move began right here. So if price breaks out of this, I would expect a buy. Okay, I would expect a buy if price closes above this. This indicator suggests that price is going to bounce there and then continue in the downward movement. So this is something you can also test. You can also test you see. But before you can depend on this, it is very important that you consider testing it. Okay, let me show you the third indicator. Let's remove this. Now the third indicator that I'd like to show you, it's order blocks, PMK07. You select that. Okay, let's put in some few settings. Okay, make sure you uncheck the dim tested demand boxes. uncheck that so that you have green demand boxes. I'd like to uncheck this point of the order pivots because I'm not interested in the signals. I'm only interested in the demand and supply zones. So this indicator can help you identify certain key levels in the market. It can help you identify certain key levels. These are points where price is bound to react to. As you can see, see how price is reacting to this zone, and when it finally breaks through, it makes a sharp move. So this is something you can also analyze or test for your own trading. Let's remove this. Another indicator that I'd like to show you is the divergence for many indicators version 4. Find it, you type that on the search box and then you select it. If you trade divergences, now this indicator helps you to identify divergences in the market. The way I like to use it is to the inputs, show divergence number, yes, show divergence lines. I like to uncheck that. The MACD. Now these are the indicators that which this indicator goes through. If it finds a divergence in any of these indicators, it reflects it. Right here it found two divergences from the MACD and the RSI. So that is how it works. To the style, I really like to keep it simple. Another thing that I like to change in the inputs is the minimum number of divergences. I'd like to see signals. I'd like to see a signal where there is at least 4 divergences in a single place. Okay, so you can check the settings and then you click OK. So whenever there are divergences in the market, this indicator can help you identify them. Let's remove this. Is the MACD. You might take this lightly. I like to use the MACD, moving average, convergence, divergence. Okay, let me show you the settings that I like. On the style, I like to uncheck the MACD and the signal so that I only have the histogram. Now, the MACD, the way I like to use it is to identify the real highs and the real lows in the market. For example, based on the MACD, here is the real high, here is another real high somewhere at this point, here is another real high somewhere at this point, here is another real high at this point. Now the important thing about being able to identify the real highs is this: if price, let's say price is at this point, the previous low was this, and this is what you can do. If price closes below this, you are looking to sell, and this was the previous high, so you can identify this. If price closes above this, you are looking to buy. You are looking to buy. See how price respects those levels. Now price broke above that and really price went into the up direction. So you see that this is how you can use the MACD to identify key levels in the market. Right at this point, based on the MACD, the previous key level is this, which is this point. Okay, price has moved now, but you can also use the MACD in many ways. I cannot give you a straight strategy for trading the MACD, but you can use it in many ways. It's like on on a trending market. Okay, it's like when price is trending upwards like this and you wanna enter at these points. To be able to identify these pullbacks in the market, you will have to rely, or let me say, you can rely on the MACD. This would have to be the pullbacks. You wait for price to pull back, and when it starts approaching the mid line, you can then take the trade right here using the MACD. So the MACD is something worth considering in your indicators. Those are 5 indicators that I consider to be helpful in trading: the UT board, the echo forecast, the order blocks, the divergence for many, and the MACD. Thank you for watching. Please subscribe for more content like this.